Ladies and gentlemen, it is happening. We just witnessed the biggest failure in US history for this specific industry. 30,000 jobs were lost. And when we get the information for why this company collapsed, this is going against all this new data that's coming out saying the economy is booming, that there's plenty of jobs out there, that everything's fine, people are spending like crazy, there's no inflation. According to Bidenomics, everything's great. But we just got this new information, this huge company that just collapsed, lots of jobs lost, and they're saying things are not great at all. So everyone, what company collapsed? Why did they collapse? What does this mean for the economy? Well, that's exactly what we're going to get into in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Okay, look at this. Trucking giant Yellow shuts down on verge of bankruptcy, Teamsters say. And look at this. More than 30,000 jobs are affected, including those 22,000 union members. So this is a huge indicator for what's going to happen to the economy going ahead. If a trucking giant is failing, that means there's a lot less goods going around the economy. That means the economy is going to shrink. People are simply going to spend less or are spending less. This is, a forward or a live indicator right now where all the other data is lagging indicators. The trucking giant Yellow is ending operations and on the verge of bankruptcy, dragged down by ballooning debt and a steep loss of business a few years after getting a $700 million loan from the US government. This is why I talk about we have to stop bailing out these zombie corporations and these zombie banks. Look at this, $700 million of taxpayers' money went to try to bail out a business that was already going to go under. And you know what's going to happen? 30,000 people are going to lose their jobs, but I'm sure the executives are going to pocket or already did pocket big bonuses over the past few years. The Teamsters were notified Sunday of the company's pending demise, which would throw 30,000 people out of work, including 22,000 union members, and mark the industry's biggest failure. So that's exactly right, everyone. This is not clickbait. This is not me being doom and gloom, hyperbolic. This is just me reporting the facts. And things must be really bad because the Nashville-based company did not respond Money to requests for comment. Obviously, if things were good, they would respond, but if things not so good, they're keeping their mouth shut. So for those of you that don't know what this company is and what caused this crash, let's get into it and what this means for the economy. So formerly YRC Freight, Yellow is a less than trucked shipper which transports relatively small loads. It is the third largest company in the category, having delivered more than 14 million shipments in 2022. So this could mean we could see more pain throughout this industry, and that's going to have flow-on effects throughout the rest of the economy. So okay, let's get into the juicy details. This is exactly what happened and what caused its demise. Yet in recent months, tensions with the Teamsters and an inability to refinance a $1.3 billion in debt have rocked the company. In late June, Yellow sued Teamsters, alleging it had been blocking the company's attempts to restructure its business and refinance debt that included federal government loans. Then in July, the union and the company narrowly averted a strike tied to healthcare benefits, leading to a drop-off in business. So okay, all those interest rate hikes that the Federal Reserve has been doing, we're now starting to see its real impact on the economy. A lot of corporations that have huge amounts of debt that could get by when interest rates are at zero, well now these zombie corporations can no longer afford their interest payments and they're going to go under. But it goes even deeper than that, everyone. While the turbulence of recent months accelerated company losses, Yellow's struggles can be tracked back some 15 years, beginning with a series of acquisitions that the company failed to smoothly integrate into its business that led to persistent inefficiencies, financial struggles, and tensions with the union over wages and benefits. And that hit a boiling point in June. Those tensions burst to the fore in June when the union refused to approve the company's restructuring plan, which was necessary to refinance its debt, and the company's statements highlighting its financial struggles grew, increasingly concerning to customers who switched shippers and further strained the company's business. In late June, matters did not improve when Sean O'Brien, the Teamsters general president, tweeted an image of a headstone bearing the company's name. Yellow sued the union days later. Well, gotta admit, that's pretty funny. But it was all too late. By the time Yellow and the union averted a strike, Yellow had lost 80% of its freight. That's absolutely insane, everyone. But keep on reading, it just gets worse. We are also in the midst of a very challenging freight market, broadly where freight volume and Yellow's part of the market are down, he said. So this is a very key insight into the economy. If there's a lot less goods going around, how can the economy be booming like they're saying? The freight industry is indeed in the midst of one of its most brutal recessions in memory. So that's right, we did have a recession, remember, in 2022, but that's it. No recession, we just changed the definition of that. As consumers return to pre-pandemic habits and demand for freight shipments has cooled. Well, that has meant fluid supply chains and on-time shipments for consumers. Some drivers are struggling to make ends meet. So this was simply a boom-bust cycle. We saw the boom of the early 20s, the roaring 20s. Kind of sounds familiar. I think we kind of had that about 100 years ago, the roaring 20s, and now it's going to lead to a big bust. And I think at the end of this decade, we will be facing a severe depression. But again, what's going to happen to all that taxpayer money? Well, listen to this. So in return for the loan, the Treasury Department received a 30% equity stake in Yellow. As of July, Yellow had repaid about $68 million in interest and only one $230 payment toward the principal amount. That's right, they paid $230. That's crazy. This is according to a Treasury report, and Yellow had $729 million in outstanding debt on the loan. Now, it is unclear how the Treasury Department will recoup the apparent losses. The department did not respond to a request for comment. So again, nobody's responding to this because they know how bad it really is. So congratulations, another $700 million down the drain. But don't ask us about cheaper healthcare, better education, and helping the homeless. We don't have enough money for that. All our money went to bailing out these multi-billion-dollar corporations. The news is unfortunate, but not surprising, O'Brien said in a statement Sunday. Yellow has historically proven that it could not manage itself despite billions of dollars in workers' concessions and hundreds of millions in bailout funding from the federal government. But these are just numbers and statistics. This is going to hurt real Americans and real people, and here's a story from Leonard, someone that is being affected massively by this. So Leonard Crack, 45, worked in Copley, Ohio, loading and unloading trailers. On Sunday afternoon, he received a call from a company representative saying that Yellow was ceasing operations and that Crack will be losing his job and that he had for 9 years. He had received no other warnings, he said. So this is absolutely devastating, people, and it's going to affect much more people like him. The work not only provided solid income, Crack said, but also friends and a sense of community. The healthcare and everything else from the job is gone, just up and gone, no more, he said in a phone interview. Crack expressed frustration at both the company and the union. Now he worries that as a dock worker, he'll be at the back of the line for a new job because he doesn't have a commercial driver's license, and he said he doesn't trust that the union will help him. So everyone, again, this is absolutely devastating news, but we need to discuss what this means for the economy and what all this means in simple terms. Well, what this simply means is, everybody, you know how I warned about that all these interest rate hikes will have a lag effect on the economy, we won't start feeling them for 6 to 12 months? Well, I think now, over the next few months, we're going to see a lot of these zombie corporations that were only able to survive when interest rates are at zero. We're going to see major corporations, we're already starting to see this now, defaults and bankruptcies hit record highs. That's going to mean more layoffs, so this record unemployment rate will eventually start to go up. And I think that means the Federal Reserve will start cutting interest rates again and printing money like crazy in order to try to bail out these corporations. And what that's going to cause, like I said, is a market melt up, because remember, markets, economy, two different things. This is going to cause things like the dollar to fall, gold, silver, and Bitcoin, all commodities priced in the dollar, to go up. So that is how I'm hedging against this scenario. So everyone, what do you think about all this? Do you think Bidenomics is working? The economy is booming, unemployment rates at record lows, there's no inflation? Or do you think things are really starting to hit the fan? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.